and a very hot and also relevant topic nowadays. I think you mentioned about like we are seeing a lot of disruptions during and also after the COVID. Especially I think I recently read an article. This is from Accenture. So basically talking about more than 90% of the Fortune 1000 companies, they are seeing disruptions such as shortages or bottlenecks, delays, restrictions. So which really having a significant impact on their supply chain. So I think in terms of the key changes, I would like to summarize, maybe using, basically moving from optimization to resilience. So when I talk about the optimization, essentially this is more about cost, time, efficiency. Right? We heard a lot about just in time, JIT, but nowadays it is much more popular. We're talking about JIC, just in time. So JIC is more sort of related to resilience. Right? So definitely JIC is more costly compared to JIT, but I think this is definitely a big change in terms of supply chain management strategy. So this is sort of the first big change we are seeing. The other one is definitely talking about digitization, because digitization is, again, is a hot topic. It has been there for many years, right? A lot of big companies, they started digital transformation long time ago. In terms of COVID, it's just a matter of further accelerated the digitization process. So for example, right, in China, we're seeing a lot of e-commerce companies and also new economy names. They started digitization long before COVID. And we are also seeing more and more, not only multinational names and also local companies, they also started or accelerated their digital transformation during the COVID. So as a result, very interesting, we are seeing some multinational names, if you look at their cash conversion cycle, is actually getting shorter. Right? So essentially because of the digitized supply chain end to end, and also they are able to move in more sales from offline to online. So as a result, they are improving their cash conversion cycle. So this is a second big change. The last one, I would say this is more about multiple sourcing. The reason I mention about this is, of course, in the past, when we talk about JIT, this is really cost. So that's why we are seeing some companies moving their sourcing from China, for example, to other locations in ASEAN. This is more from cost perspective. However, during or after COVID, we are also seeing like more and more companies moving away. But this is more from a strategic sourcing perspective. So essentially, this is to reduce over-reliance on one particular country, and then they are adopting more sort of dual or multiple sourcing. I think firstly, maybe I just mentioned about like three big changes in terms of supply chain risk management practices, right? So as a result, I think definitely there are some implications from banking perspective. For example, moving from JIT to JIC, that means the companies need to increase their inventory holdings. Also, they are having more payables on their balance sheet. So that means actually they need to work closely with banks in order to provide better inventory financing solutions or payables financing solutions. Right, this is one area. The second area also mentioned about digitization. Again, that also means if our clients are digitizing their supply chain, digitizing their ecosystem, that actually gives us as a bank the opportunities, how to integrate our banking services into our clients' ecosystem. I think the last change I just mentioned about multiple location. This is also very important because our clients are basically sourcing from different locations. That also means the global sort of footprint for our banking services is becoming also much more important and also relevant in this regard. Right? Now go back to your question in terms of some key trends that we are observing in terms of supply chain finance. Then basically we are seeing three kind of key trends. The first one is essentially talking about we are seeing moving from financing only to start with servicing first, then followed by financing. So this is the first trend we are seeing. For supply chain finance, this is a very traditional banking service. It has been in the market for many, many years. Right? In the past, the banks were very much focused on financing only. But in terms of SCF, I mean supply chain finance, the trend in the market, because of the digitization of supply chain, we are seeing more and more fintech companies. And also we are seeing more and more large corporates are moving into supply chain finance. So that's what I'm saying, from traditionally financing only to nowadays servicing as the first, then on that basis to provide financing services. So this is the first trend we are seeing. The second trend we are seeing is for banks, I mean, in the past, very much focused on origination. But nowadays, we are seeing in terms of supply chain finance, it is actually enhanced the business model, I would say. Is essentially we're talking about from origination to distribution. So that means that distribution capabilities are actually getting much more important, relevant nowadays in order to develop a very successful supply chain finance business. The last trend we are seeing, this is more related to, again, go back to the first trend, right? We talk about the platforms, talking about a lot of large corporates and also fintechs moving into this area. So I would say nowadays, if you look at the platforms, basically we are seeing at least like 3 or 4 types of platforms nowadays in the market. So very traditionally, banks are providing the supply chain finance business. And nowadays, we are seeing more and more fintech companies. Right? So for example, in China, we are seeing a few large fintech names, such as Link, and also another fintech called CSCC. Right? They are providing supply chain finance services. And also in this regard, I also mentioned about corporates. We are also very interested in seeing a lot of big companies in China. They are setting up their own supply chain finance platforms. So we are seeing like big companies like Paul China, BYD, Sany, those kinds of names. They are also setting up their own financial supply chains.